Hello, today is the 22nd of February. This is another market report, and I wasn't able to record this one during the week, partially because of my workload, but also it's Saturday provides a bit of a bit more stable environment, I should say, because probability of being of the market being hit with another news piece is low, obviously because the market is closed and the only thing that's trading right now is BTC. So nevertheless, I think it's quite important to stay on top of what's happening now, and let's start with a bit of a macroeconomic backdrop as I see it. So basically, we're still living in post-COVID era, and what's happening now is basically the Federal Reserve is still trying to fight the consequence of the COVID stimulus, which is inflation, and it was showing some signs, some positive signs of being tamed in the third quarter of 2024, but in December, unfortunately, we started to see it picking up, and this continued into this year. And given the fact that the Federal Reserve did not provide any fixed schedule of lowering the rate, and they basically promised that they will assess the situation as the information appears, this significantly reduces the possibility of lowering rates in the foreseeable future. And we also saw that in the rhetoric of Federal Reserve, in Jerome Powell's testimonies, and also in Fed's minutes, which were released not so long ago. So basically, that's the main thing, the inflation thing. In addition to that, what we saw in this year is basically the ISM, business activity, business confidence reports are coming in a bit mixed. Manufacturing is still strong and optimistic, but in services, which are 80% of the state's economy, it actually came in worse than expected. And also, like the final two final warnings, I should say, were released during this week. The first one is that we actually saw new building starts a bit worse than expected, and also Walmart released very lackluster earnings and also guided lower. So what this means is that obviously the amount of the reduction in inflation and the amount of rate cuts wasn't enough to actually provide enough optimistic, enough of economic conditions to make the markets and the business optimistic. Because obviously we saw some pickup in optimism before the election, and it is sort of plateauing, and with this new data, it's on the decline now. And at that point, I didn't even mention like the policy of the new administration, because all of them are basically pro-inflationary. Reduction in immigration is a reduction in cheap labor. What's more, tariffs. Obviously, tariffs cause rise in prices. We don't know at the moment. Yeah, I should say, like, mention that ahead of this analysis, that we don't yet know the extent of these new measures. Will they be implemented? We will see mass deportations. Really, will we see new tariffs? We don't know yet. They were postponed. And also there were mentions of like territorial additions to the states, which is also quite inflationary, obviously, because you need to get more money to finance that in one way or another. So what we see now is that inflation by itself, even without new measures, new policies, was rising its head again. And potentially these new policies could even add to it. So with that being said, and also we see a reduction of optimism, business optimism, I should say, plateauing, but this Walmart earnings is quite accurate in terms of consumer confidence, because Walmart obviously is on top of the economy, and United States economy is 80% consumer. And so this economic situation is like cautious at best, I should say. And what's interesting is that actually the market was weathering it quite well right until Friday, because on Thursday it was a good day actually, because it closed almost at the highs. And when the information flow is negative and the market is strong, it's one of the best environments to trade on the long side, because obviously the retail is out. The retail is scared, and it's smart money who move the price in these conditions. And actually, I can show it to you right now, but investors' sentiment has corrected significantly during the previous weeks, and it's actually good, because as I've said, it provides businesses, funds, institutional investors with more opportunities to accumulate positions without being raided by retail and without prices being pushed up. But the Friday changed it all, and obviously lots of trading, huge volume, absolutely bad disastrous close. And let's look at like the market darlings. I know, like AMD was already weak, okay, I get it, but Amazon completely destroyed with almost no signs of institutional support. Avago, a previous leader, the company which was supposed to take the leadership from NVDA, basically same. High volume, huge sales. Duolingo, one of the growth stories, the supposed beneficiary of the DeepSeek news, like cheap, efficient, easy to train, open source AI models. This was the stock of the supposed new era in the technological cycle, in the cycle of commoditization of AI. Same here, minus 8%, huge volume, and volume was picking up during these previous days as well. Google, huge sales, new lows on volume. INTC, this one is a bit different, because this one has priced in government support, so it's holding quite well. Maybe a sign of a new era. IoT, basically same, huge sales. This one you could sort of foresee it basing here, maybe ahead of earnings. Nevertheless, still very weak. Meta, also very weak. And this one was supposed to be another leader of the new era of open source models, given its foothold in this area. Microsoft, same here. This one was supposed to invent the quantum chip, but guess what? Market doesn't care. NVDA, this one is supposed to report too, like huge sales. Not catastrophic at this point, but still, you can see that the volume was elevated, closed on dead low. The good thing is that it's still above or at the level of the 50-day moving average, so not completely destroyed yet. Tesla, I was considering this one as a potential bottom, but you could basically see that it's at the level or around the level now, like another wave of sales. DSM did not worsen its situation too much, but it was already quite weak. maybe forming another pivot point around here. But basically, I'm not talking about buying stuff here. I'm just measuring the rate of the damage that has been done to the market by the Friday. IWM, small caps, very weak. Obviously, these guys need lower rates more than anybody else because lots of these businesses, small caps, mid caps, they have much less fat to burn through. Sometimes even no reserves at all, and they are very dependent on the monetary conditions in the economy. So this is bad. Basically, the 50-day is already sort of curling to the downside, and this looks like bear market to me already, even given the fact that it's still above the buffer, above or at the level of the 200-day moving average. So this was the first wave of selling, this sort of churning, wedging to the upside. Now another wave of sales. So oil is quite weak also. And why oil is weak? Oil is weak. Basically, there is only one reason so far: it's a possible recession. Why there could be a recession? Well, because of tariffs, obviously, because disruption of global trade is could still be a shock to a much extent. Well, we still need to figure that out. Maybe it's just rhetorics or just a specific style of diplomacy. But if it's about to be realized, even with the fact of decoupling, and of course we live in a much more fragmented world economically, I mean, since the previous term of Trump, even with that fact, ramp up in tariffs could spur massive reconfiguration in global trade, and oil doesn't like that, obviously. So the Friday, it seems, was like the straw, maybe, which could have broken the camel's back. But you should also keep in mind that it's still a very much news-driven environment. So I don't know, maybe something is about to be released tomorrow on Sunday or early in the morning on Monday, and this will open inside, maybe consolidate a bit and break out to the upside. The problem is that there are not many things to trade from the long side here, and February was prolific with setups. Most of them did not work that well. This is the problem. Basically, Friday erased lots of gains there, and this is like another shock in addition to the DeepSeek sell-off not so long ago. So given the lack of setups here on the long side, it's capital preservation is a priority once again, and it's okay. I think that this correction, if it will be a correction, will be more of an intermediate term, because I still doubt that the real trade war is about to transpire. I still think that it's a specific style of diplomacy, and it will settle. It will settle in all the pressing matters, in tariffs and in war and stuff like that, more or less. I'm still bullish on the states as a whole, but you got to be cautious because we have quite noticeable economic headwinds, and what markets want right now, they want certainty. So this month, the coming weeks, I think, will be a search for certainty. Will we get a true trade war where everybody is for himself? Yes or no? Will we see some sort of a stable Ukraine settlement? Yes or no? So my answer, my expectation would be to see more of yes in the coming month, and this could conclude this intermediate term correction, which actually started in December. I think it's safe to say that it has actually started here in December, and this was just wedging up. So it could go quite lower from here, maybe undercut even these lows of 500 on QQQ. Okay, and with that being said, let's take a quick look on the coin, and it also tells a story, I think, because obviously lots of bullish news, but no progress in price. Like the states are considering crypto, are finally making regulation less nebulous. Nevertheless, no progress at all. And the 50-day actually declined an attempt to break through it again. What's good here is that on the weekly, I think it still doesn't look that bad. Basically, what we see here is that the fact that the price is doing nothing for 3 weeks, a bit expanded volatility at the end of this week, but nothing too severe in my opinion. So this one could maybe buy time, or maybe we will see finally some good news for this domain as a whole during the coming weeks, and we'll see. So in practical terms, if you are not short, and if you are short, I think this is the time to be short, but obviously you've got to be positioned for these kind of events before they transpire, because as I've said, news-driven environment, positive news, open inside next week, consolidate, go to the upside. Could very well be the case. And on the long side, I have shown you how the February watch list looks like, and you can see that it's quite volatile, and it's quite volatile both on the long side and the short side. So this is the time to be positioned defensively, in my opinion. Okay, so that's it for now, I guess. Yeah, let's be in touch.